Hey guys, what's going on? What's going on? Hey, I want to make this quick video. This video is going to be just two pairs, just to go over some top-down analysis to get the flow, get the feeling of how to actually, do your top-down analysis. This is the main thing. This is the absolute main thing to keeping you on the right side of the trade. I see a lot of traders are not um, going in the right direction. They're going all over the place. You have to go with the market flow. I always start with the monthly. Look at the monthly to see what the flow is. What is the direction we are trying to go in? And then I look for what on this time frames. I look for candlestick patterns, and I look for formations if I see them, like head and shoulders, inverted head and shoulders, one, two, three, tops, bottoms. Is it ranging, and so on and so forth. Okay, so I'm going to do that here with this pair. This pair gold, gold DXY, and I'm going to pick another one EJ, just randomly picking it because I want you guys to just see this flow. Okay, this is just me showing you how to follow the market flow. All right, okay, this is gold. I'm in gold in one account, and this is what I looked at. I see, and this is just go without any of the other indicators that I use. Excuse me. Um, Gold is ran up. This is a lifetime high here on the monthly. Okay, you see these peaks, peaks, peaks. These are the wicks areas. Nothing behind here, just this. So I just extended it way out, for the future. Okay, all right. Plus makes the charts look a lot cleaner too. So here we see gold is struggling to get up past here on a monthly. And if I'm zoom in, I'm going to zoom in, and you look at this is February, and the day is February the 6th. Yeah, February 6th. And you see this candle here, it's inside of last month's candle. So actually we have nothing to deduce from this candle here. Absolutely nothing. But look back. You see that gold is up. You see what gold went up. So we see what gold went up. It making higher highs. Pull back, went to a range. Okay, this is a higher low from below. From below. And look, it made a higher high right here. Pull back. And did what? Made another high. So here's what I'm going to do. I'm going to put this from this one here to that, just the wick. Go to the wick, go to the wick, and pull it up to about right here. Okay, that way you can see. Okay, you can see. Now, and I'm saying if gold decides to go back down, it may test back down here at 1949. It may. We need more information. Now, where do we go to get that information? Drop down to the weekly, and on the weekly, you're going to see right here on the weekly. What am I looking at? I'm not looking at all of this back here. You can go to 2020 if you want, but I'm looking at the near term, the last immediacy of what the price is doing, because this is what matters. Of course I need to know the flow. The flow we see is up. Okay, up, 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 up. But I also need to see, why am I doing this? Because if you look at this, guys, from like right here, May last year down to here, that's what is that, May? What is that, May? Dang, that's 20. That's a whole year. My God. May the first, yeah, the October. So okay, so that's the whole May, June, July, August, September, October. 5 months that this thing dropped. You see that? I need to be trading in that direction. That's 2,744 pips. Okay, well, I'm not gonna miss that. Okay, selling down here. Okay, market hit this support area. You should be selling up, buying up, selling down, buying up. What is it doing now? It's rejecting off of this area here. Okay, so let's come in closer. This last leg gold is clearly in an uptrend. Okay, but did it hit anything? Again, it's in this range here. You have to see it. Your eyeballs have to see it from this high to that low. Okay, this high to that low. Okay, we're in the range, so it's not really doing anything, but actually it's drifting down, but it's moving in this. Okay, so look at this zone. We just pop, pop, keep touching this zone. Okay, and price currently now for this candle, the way the candle looks, this is today is Tuesday, so we only have 3 days of information on this. It's looking like it wants to push up. Okay, come closer to the daily. Now is where you get to see what is this bad boy trying to do. Now I use moving averages on my charts. I do. Why? Because price is actually bouncing off of this. This is an institutional moving average. I'm not going to tell you what it is. Figure it out. But this is what it is. And the price comes through these zones. And no, they're not random. Price. This is what the institutions are using. The hedge funds. This is their targets. This is where they're putting in their buys down here in this zone here. Look at this. When these two cross over here, look like over here, cross, it's time to buy. Okay, back in the zone near the SMA, buy. Okay, back in the zone, this little zone in here, price pushed it like you on a rope, doing a rope a dope, pushed in, pull back up, pushed in, pull back. Oh, we dropped. We went from zone to zone. Okay, so this SMA is very important. Okay, I use other ones, but I'm not going to confuse it. I'm going to keep it just for price action. So we see that this bad boy here came down here to this zone. Now I have a supply and demand tool that is called Supply and Demand Pro, and what it does, it points this on here for me. You see it's coinciding with my my support level. Gives a signal here to go long. Okay, boom, 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 up, down, up. Now if you look at this, if you look and you see what price had did, let me find that influx right here from this low area to that high. I'm going to take these two. It's just fib stuff from this low to this high. Go over. Look at where price landed in the gold. It's called the golden zone. It popped down and pop back up. This is another cue. Look at this. This is your cue. This is your second confirmation to say to buy, and it do up, bounced off, up, bounced off. You got to stay with your trade, and it also depends on what are you doing. Are you like what I just showed you on one daily? This is a longer term trade here, because here if you're already long here and you wait for this pullback and you through your trend line and you got long here and you waited for the CTO to break, got long, oh, might have got stopped out. Oh, look, you don't do that. You wait for from the low, made a new high, wait for the pullback right here. Now you make your strike. Now you strike. Pow! Now look how long this was. This is from October the 23rd all the way up to, now I'm looking at the peaks. I'm not looking at from here to here. You can do that. This is short. What I'm showing you is something called short term swing trading using the daily from October the 4th to October the 27th. That's about a good 3 weeks, right? About 3 weeks. How much did it move? Let's say you got in above here and you did it right there, 1,585 pips. Okay, from here to here, pull back on the SMA and popped up. Okay, or if you want to hold it from here all the way up and you feeling great about it, a good 2 months. Okay, October the 4th, December the 5th. 2 months. That's longer term. Now you went over a month. Okay, so what is the market doing right now? Well, right this very moment, price is pulling back. It made this high, spiked up. Notice this, guys. When price makes a new high, what it's going to do is reach up and then it's going to pull back. You can see it on the indices, SPX, NAS, JP, the HIN, what's it called? The Hysen is doing it. I think US 30 all did that. They all made new highs and they popped back. They're coming around and getting their strength back up and ranging and then ready for another push off. Now here is, I have a counter trend line right here from this high to this last peak here, and I'm watching to see if gold is going to come back up here in this range. Right now it looks like it is. Okay, now I'm just showing you just the trading view because I have other things that I look at too. Like why did it stop right here? Well, you can see over here this previous area of resistance. Okay, let's drop down. Drop down. Now, what am I doing now? I'm getting ready to go to my chart where, like I just told you, short-term trading. You want to do what? I want to execute on this chart here. Okay, I don't need the confusion of anything lower than this unless I'm day trading. If I'm day trading, I'm going to go from day to day to day to day to day. Okay, and if you're going to do that, I'll show you here in a minute. You need to put your session separators or period separators on your charts or on your trading view so you can see when that day comes in and when the day goes out. Okay, all right, so this is what price did. It landed right here from previous, and my supply demand pro tool already told me it was going up, so I dropped down lower. I did, to get a sniper entry, a better entry right over here. I'm not going to show you guys that. I'm just trying to show you price action. Okay, so in this pullback, this downtrend, price is actually moving up. Now look at this. Price hit here. This is gold, and retraced a little bit, and that's trying to break this area to do what? To get back up through here. Okay, let's go. You have to do your proper top-down analysis and follow the flow of what the market is showing you. If the market is showing you, yes, you got the higher time frame telling you up, but it's gyrating up and down through the whole movement that it's doing, so you can catch those buys, you can catch those sells. Okay, you decide if you want to be a swing trader or if you want to be a day trader. There's different kinds of swing trading: short-term swing trading, like I showed you, a couple of weeks, or long-term swing trading, a couple of months. Let's look at DXY. It's doing its thing as well too, monthly. DXY. Just was got through talking to some people about this one. Now look at this. DXY is, let me pull it up. It's not a lifetime high because why? It's been here before. Let me pull it up, you guys. And when you get your deal, your charts, use trading views data if you can. Look how far back this thing go. This thing went all the way back to 1967. That's 56 years. That's just the age I am. 56 years ago. Yeah, 56 years ago. See what I do? I put the high here. We may reach here one day. I don't know. It was back in the 80s when America, when we had the balance. The budget was actually kind of balanced back then. Days of, I think, who was there? Clinton, or was it Reagan, whatever. Anyway, whatever it was, we were in a whole lot better shape than we are now. And this is the low that we hit here in '08, the housing crash. Put these zones on your chart. This is the monthly view, but when you come to the weekly, there are other zones. You can just make the chart just show that. So I just wanted to show you this. All right, so what are we in now? And just looking at this chart, you can see from '08 went up, down, ranging, up, okay, down. So we're in an overall uptrend. Now, that doesn't mean that this trend it's always up. Hold on, guys, it's 12 o'clock. Hold on. Okay, there's 12 o'clock markers. This time, just trying to see what's going on here. Okay, we're good. All right. See, what I'm telling you guys, I'm doing the exact same thing. I have a very high consistency rate, okay, because I do my TDA. I look at the chart, just like I'm showing you guys. I do TDA, and I'm following to see what the market is doing. I'm going to add another BTC because BTC is about to get ready to push up. GU and dollar yen. This is down. Move this out the way. This is down, up, and these are down, down, and GU is up. Okay. All right. So let's get back to the lesson. All right. So what I was saying is that here is DXY, and just what I just showed you. Now listen to what I'm about to say. This is the monthly. Okay. Let me draw my trend line. That's the first thing I do. What's the trend? The trend is clearly up from here to here and go right straight through. Okay. Eventually, price will break through this. This is a resistance that we have for going from zone to zone, from here to here. Price is bounced in here, and we're still in this area. So DXY, it looks like it's in an uptrend. It does, and it is. This is long term. Looking at the candle formations here, you see this is not a bullish engulfing. This candle here, this red candle is still bigger than this candle. This candle here just made a new high. This month is just now going, so we need to see what it's going to do. Now this top of here, price has just pulled back. So all we're in is a little pullback. So what I'm doing, as price is, let me drop down to the weekly so you can see, as price is going down, see this downtrend from here to here, I'm trading down. As price is going down, I'm selling the USD base pairs and I'm buying the USD quote pairs. Am I losing? No, I'm not losing. Why? Because I got stops. My stops are protected on all of my positions, so I'm not gonna lose. Now, this here in the past, from December, the past month, December, 7 weeks, we have been going up. Okay, so look, lower highs, lower highs. Only one lower low in this area. Now, if you look at what we have, I'm going to zoom out. Look at this. This is the same idea. Go from this low to that high. Look at where we are. We just hit the 50% area. I would like to see this price come all the way down into here where this moving average is, to come back down here before I start talking about buying. So right now, immediate near term, this is in a sell. This is in a downtrend. So I'm looking for sells. Okay. All right. So that's how I'm viewing the market. That's what, and I'm sticking to it. Okay, until the sentiment or the trend changes. Go to the daily. And what do you see on the daily? On the daily, near term. Because why am I looking at something that's way in the past? Okay, you need to know what's going on right now. What happened in the last 4 months? Look at October. I mean, come on, man. It just hit here. Okay, look at this. Boom, low, low. It ranged. This area right here was broken. I'm gonna go from here, not from here, not from here. Go up. Go when it start ranging and making the break of, this is called a break of structure. When price goes below here, not this candle right here is a candle that's telling you that I'm about to change directions. It's a reversal pattern. I call it 1, 2, 3, right through here. Is when you start to look and take your cue. You can get in at the low of this candle. If you do get in, make sure you put your stop loss up above. Now I'm on a daily. This is quite a bit of distance. Let's say you got in here, right here, and you put your stop loss here. You're talking about 90, 91 pips. Let's say 100 pips. You don't want to go that low. Go up to this about 100 pips. Now remember your risk management. This is a long-term trade. You risk 185 pips. Look at what the market did. You entered and you got it. Let's say from here. Oh God, I'm gonna get a little. No, you're not. Chill out, bro. And it go down. Oh my God, it's in the zone. Well, you can get out. When do you feel comfortable? The 286. Okay, so you did a what? 186 to 286. That's a 1 to 1.5. But what if you held it all the way down, 185 to let's say 470, about almost a 1 to 3. You see what I'm saying? And it didn't take that long. It's from November to December, a good month and some change, almost about 6 weeks. It's not bad. It's almost 2 months. Not bad. You see what I'm saying? Just follow the flow of the market. So there, anyway, we have this down, up, down, hit the trend line a little bit. I need to adjust this, but it can go through price. I like to hit it through wick. My trend line through the wick. Let me adjust it so we can keep consistent. So nobody claims that be fudging the information to make it look good for him. You know, some of these young folks, I swear. Right there. Boom. All right. So here we go. Now, now what we doing? We went down. If I go to, let me show you this because I'm going to show you why this is dropping. Drop down to the 4 hour. It's waves within waves, waves within waves. I'm trying to find the peak. Let's use this peak. This is the peak. One, two, three. It's a reversal formation. Look at the SMA price drop below there. I'm not too proud to say I have a little help over here. Heck yeah, you get your help. Get your help so you can time the market. It's about you. You're not in competition with nobody else. It's about you and what you see and what's going in your pocket to pay your bills and your lifestyle. Here's your SMA. Okay, to help you with the time. Look at that price. The trend is going down. So, anywho, let's do this. Put it from here, the fib from here down to here. Look at what price just did. It went from here to here. Okay, it retraced in beautifully in the golden zone. Look over to the left, hit resistance, and now price is dropping. Sell dollar CAD, sell dollar yen, sell dollar Swiss. Dollar Swiss is kind of slow. Buy AU, buy EU, buy GU, buy NU. Okay? Simple as that. This is about timing. Okay? Now, what do I see here now on this little peak here? This little area here, I see almost a double top. But again, the two makes this red zone. It's a supply zone. Small, it's a weak supply zone. So when it breaks this area here, you go down. Now, guys, this may look like it's a little bit. If you're day trading, if that's your thing, you want to grab some pips for the day, and so you got it from right here to here, down to the bottom. That's like 17 pips. 17 pips can be a lot, okay, depending on your risk, okay. But this is not even beginning to drop yet, okay. Again, like I said, back on the daily and on the weekly, I'm looking at this bad boy trending down. Now it may come down, pop up, hit this, and then eventually go down. And if notice I'm not stuck to one thing because you're naive if you do that. If it breaks this and starts to go back up and breaks this high, then okay, you've gotten what you've gotten out of the market for what you see now for this immediacy when it broke up, came down on a lower time frame and came back down. Okay, so what I see here is that this candle needs to fill in this space. It needs to come back down into this zone. Okay, this is called a fair value gap, and that gap with that zone, it needs to be filled in. Now, what it does from here, that's your business. You need to pay attention. If you're in your trades, lock your profits in and pay attention. It may bounce, go back up, and then continue down, or it may bounce and go back up. We don't know, but look at the immediacy of this trend. Okay, it may finish up here. We don't know. Okay, need more information. All right, so that's that. Let me do one more. Notice I'm doing it from the monthly, and I'm working my way down. Okay, let's look at EJ. EJ, I seen some boys got smoked because they didn't listen. They didn't listen to the charts. Not to me, to listen. What is EJ in? It's in clearly a long-term uptrend overall since COVID, since 2020. Down, up, down, up, down. Now it's nearing my supply zone up here, and that supply zone is a area of resistance. This is actually an area of resistance, and over here to the left is uh, the peak area. It's not the absolute highs where it was back in 2008, 2009 range. So we're working between here and here. Okay, and right now these candles, notice that they're flat. The candle bodies have not went above this area. Okay, so we're coming into a small range. It's ranging, and this week's candle is this month's candle hasn't done anything. We're going up a little bit and back down, and now we have a doji. Doji means what? indecision. I don't know what I'm going to do. I don't know what direction to go. I am waiting. So let's go, and we have months. Remember, that's the long-term view. Let's go to the week. Let's see if we see any kind of patterns. There's no patterns. I don't see any patterns like patterns. Let me pull this down here. Only thing I see is this high, this low, and that high. Let me draw my trend line from the last swing low here. This one's sticking out, so let's go with that one. Let's see right there. Okay, that's remember, guys. These trend lines are respected. They are respected. The market doesn't forget. It'll come down and hit. Price will hit and look like it's coming down. It'll come back up and then it'll wiggle its way around and possibly continue back up. So right now, what we're seeing is this high and this low. And you see the candles going up. Trend line from counter trend line from this here to here. Now we're in the middle of a range here. The trend is up, but it's pulling back. Okay, we're nowhere near. If I drew the trend line, this, you can use any. You can use this one. What I like to use is a pure run. You can go from here to here. It hasn't like broken into its 50% or its 61.8 pullback. Now, it doesn't always have to go into the zone, but if it lands there, you can pretty much sure bet that price is going to do something in that range. Okay, so from here to here, what are we doing now? The past 3 weeks, 3 weeks, this thing has been in a downtrend. We're looking to go down. Okay, go down to the daily, and you can see clearly on the daily. And notice I'm just using price action. There's no indicator. You don't need indicators. Really, to me, indicators just helps me to solidify what I'm thinking about doing. That's all it does. You don't need to do it. Once you cut your deal on over here, whatever you're using, cut it off and say, okay, all right, got it. See what I need to see, and then carry on. All right, now look, we're clearly in a downtrend. Clearly, the past 2 days right here, you could have caught this trend. But look at this. Up. Look at the SMA prices bouncing up. It created a counter trend line here on the 19th. This is the candle we're using. Okay, price wicked it, and then it's just drifting down. Okay, so what do? You can draw an inner trend line and go from here to now this one. This one's the one that you're using. Okay. All right. If price comes out of this, it may come back up. Wait for it to come. Don't not as soon as it wicks its head out. Like a hedgehog. Wait for it to close. It's okay. It's not just gonna just drop like that. And if it does, it's telling you a sign that I'm about to go down. Okay, I'm about to continue down. Drop down to the 4 hour. Now you want looking to get into execution. I see up here. So I was looking at up in here. Price was coming down. It pulled back. Let me show you. Guys, learn to use your fib tool. She's incredible. Go from here down to here. Like magic, bro. Back up into the 50% deal. Let me just show it on a 4 hour. I don't want it on the monthly. Just a 4 hour. Like magic. Boom. And look, when it breaks this, when it comes back down, huffs back up. One, two, how many pips was this? Not assume, let's just say this low of this candle right here, down in here. 87 pips is not bad. And it's not done drop. It has to drop down into it hit right up in here. So about 113 pips possibly. And probably even more. Okay, once it gets to this 100% area right here, when it reaches this area, what you know the drill. Close 50% of your position right here. Move your stop loss. Like if you got in right here, move your stop loss to right here, and let this bad boy do its thing. Okay. Or if you want to, you can close the chart. You can just close it and say, okay, I'm done. It's guys, you gotta understand. The target is the target that you make. The chart is showing you where to go. Let me go up here on the daily. Okay, the chart is showing you what she's trying to do. Now, yeah, you hit right here, But there's more. There's probably more. Look at where I'm at and go over to the left. See this area of support, previous area of support. How strong is it? How many times have we been here? One, two, three. You know this little zone. And you draw your little box. Go straight through. I'm gonna go straight through here. I'm gonna go through here. Boom. Now I'm gonna show you guys something. This is a little trick. Um, this is a yen JPY pair. Okay. This is a little extra something off it. Get yourself where's she at? Right here. The JPY basket. Okay, this is eliminates the need to play with AJ, um, CAD yen and Swiss yen and EJ and um, pound yen and New Zealand yen and blah blah and UJ. Those seven pairs, I think. This will tell you what's happening. If this is going up, excuse me, if this is going down, let's look at it. If this is going down, then the yen pairs are going up. What date is this? Because this is the commodities of the Japanese yen. This is December the 14th. Let's go back to EJ and look. And notice I'm ready. I'm prepared. Get prepared, guys. You ain't ready, you playing around. Get serious about your deal. What is this? What day did I say that was? Excuse me. That was December the 14th. It dropped. Let's do some comparison. Okay, let's see if we're right. Let's follow this bad boy, EJ. December the 14th on the daily. December the 14th, right here. See, it's going, when it's going down, this is what going up. It's the opposite because why? JPY is in the back. JPY is the quote pair. Let's do them all. JPY is the quote pair. If JPY was in the front, then you follow. So just the opposite. So if it's going down, then you go up. It goes up, you go down. Let's do AJ. Where is it? Let's start with what I have here. Swish in 14. See? Up. Doesn't matter. They're all the freaking same. Grab one and don't ever do more than one because then you're gonna get smoked. Look at the 14 where we are at 14. 14 somewhere in here. You're in here and look, it just went up. You see what I'm doing. You job. 14. Look, don't y'all look the same? Up. Okay. Now coming down. You see me just sell. Guess what I'm selling to? Guess where I'm going, bro? Right here. See what you see how my eye went to the left. Always go to the left. 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 We're going over here. Call CNN and tell them, hey, B said. B said it's going to 145.01. Okay, so it's going down. I needed justice because I had this one right here. There we go. Boom. So this is what I'm going to. So let's go. Keep going. Keep going. I'm finding all of them. AJ. December the 14th. Right here. Around the 14th area. Right in this range here. Look, and it went up. So the point I'm trying to make to you is you grab that basket, that pound yen basket for yourself. And if you're gonna trade these pairs, do the opposite of whatever that's doing. Last one, NJ. Okay. Up. Okay. All right. So that's that. Okay. Down. So if this goes up, I want to be selling, and that's what I'm doing right now. Okay. All right, guys. I wanted to drop this for you guys so you guys can see exactly what's happening in the markets and how to do your TDA starting from the monthly, the weekly, the daily, and the 4 hour. Notice I did not have any indicator, only one, and I'm not even really using it, and that's the SMA. Okay? Use your eyeballs and use proper market structure and trade with the flow of the market. Okay? The monthly, you're looking for candle patterns and the market flow. The weekly, you're looking for chart patterns. One, two, three. And candlestick pattern. In bullish engulfing. Boom, we're off to the races. Came back down. Whoa. Okay. And you're looking for reversal formations, and you're looking for your zones. You're looking for key level support and resistance. The daily, this one I'm on right now, is the all everything I just said, but you're just zooming in to get a closer view of what's happening. Okay, reversal market's been dropping. Boom, up, down. This is a clear classic reversal formation. Okay, you can, if you feeling comfortable, get in up here. If you want to draw a trend line and you feeling great about your situation, I feel great about my situation. I feel great about my decision. I'm gonna go from here to here. Look, and I'm gonna sell JPY on December the 4th, and you already seen what happened. Boom, and it's going up here to hit this next zone. And this just so happens to be here. You see what I'm saying? This just so happened to been here. Boom. Hit it with this candle was all the way up here and it rejected. All the way up here, rejected. Came back down, came up. This one closed. Up here, it rejected and it closed down, and so on and so forth. Okay. On the 4 hour, you're coming a little bit closer, and you're doing your execution on the 4 hour time frame. Whoops. To get what? A sniper entry. Here we go. This is where I was over there. Sniper entry. Just that up down. And to be able to trade on a shorter time span. Sorry guys, it's 12:23. A shorter time span. Okay, up, down. Actually, right now it's profit taking time if you want to for the day. For day traders, if swing traders, just move your stops up. The market moves violently, you're still going to take profits. But swing traders, if you want to hold your positions to keep your stops below your entry prices and let the market continue on doing what it need to do, or get out and get back in. Get out, get back in, get out, get back in and out, in and out, in and out. Okay, here you see this right here, like execution. Where would I executed this at? Okay, a couple of places because I had a couple of times on the 16th here and on the 26th up above this area right here. I would have entered it because of my criteria. Enter, bam, take profits for day trading. Take profit for day trading, or this is the beginning of my swing trade. Stop is below here or below here, and you let it do what it's trying to do. Okay, keep that 4 time frame regimen in order: monthly, weekly, daily, 4 hour. Okay. All right, guys, that's going to be it. Just wanted to drop this on you so you can just start looking at the charts in a different kind of way. Look at it nakedly. Look at it the way that it is, because this is just all about price action and following the market flow. All right, guys, take care. Peace.